Hi, it's Ashik here. Welcome back to my channel. In this lesson today, I'll show you how to prepare manufacturing account. So let's get started. Okay, look at the question on the screen. What is written? The following balances were extracted from the book of Wang Manufacturing on 30 April 2017. So there are some list of accounts given in the question. We'll prepare this manufacturing account here. Okay. So what is the first item in this account? First of all, you have to write opening inventory. Okay, of raw materials. Okay. So look at the question here, written that inventory at 1st May 2016. Raw materials is 18,200, work in progress is $23,000 and finished goods is $37,000. So as we are preparing manufacturing account, so we will take the raw materials, okay, opening inventory of raw materials, which is $18,200. Very good. Then we have to write the purchase of raw materials. Okay, so let us write here $210,000. Okay, now we will add these two values. So if we add, it is $228,200. Okay, then we have to subtract the closing inventory of raw materials. Yeah. Look at the additional information in the last of the question. Number 1, inventory. Raw materials are 16,500, work in progress 18,100 and finished goods 41,500. So it is manufacturing account. We will take the raw materials. Okay. So first one is $16,500. This is the closing balance. Okay. It's written that 30 April 2017. Okay, so we start on 1st May 2016. So closing inventory is 30 April 2017. So let us write here minus or less, whatever you prefer. Write here closing inventory of raw materials are $16,500. Okay, now if we subtract this value from here, our answer is $211,700. Okay, so what does this value call? This is called cost of raw materials consumed. Okay, now we need to calculate our prime cost. Okay, so how to calculate prime cost? Prime cost equal to cost of raw materials consumed plus factory wages plus direct expenses. Yeah, so let us write here first of all manufacturing wages. Okay, what is the value here in the question? It is $102,000. Okay, why did I write this here? Because we have some adjustment with this. So look at the adjustment number 2. Manufacturing wages of $2,500 are owing. Okay, owing means outstanding, unpaid, whatever you call. So add this plus $2,500 here. So if you add, what is your answer? It is $104,500. Okay. Now we need to add direct expenses. Okay. So right here direct factory expenses. Okay, $8,800. Okay, this is all about the items given in the question. Now if we add these 3 items, what is our answer? It is $325,000. Okay, so what does this value call? This is called prime cost. Prime cost. Okay, to calculate our cost of production, we need to add our factory overheads with this value. Okay, So let us write here factory overheads. Factory overheads. Okay. Fine. Now look at the question here. Factory management salaries. Yes, it is factory overhead. So right here factory management salary. It is $36,500. Okay. Next we have building maintenance, which is also factory overhead. So right here building maintenance. In the question, it is written that building maintenance are $31,000. But look at the adjustment number 4. What is written? $25,000 of building maintenance relates to the factory. Okay, so that means you have to write $25,000 here. Okay, and the rest of the value will go to the income statement. Later, I'll show you how to prepare income statement. Okay, fine, very good. Then what do you have? We have here rent, which is $24,000. So write rent $24,000. Okay, why I wrote rent here? Because we have adjustment. Okay, now look at the adjustment number 3. What is written? Rent and insurance are to be apportionate 50% to the factory and 50% to the administration. That means 50% of rent will come here and rest 50% will go to the income statement. Okay, so $24,000 times 50%. What is your answer here? It is $12,000 will be in this account. Okay, then what is next we have here? Insurance. Okay, so let us write insurance. So $9,800, and adjustment says take 50% for manufacturing account. So if you adjust, it is $4,900. Okay, after calculation. Then what we have? We do not have any more items. Okay, but look at the adjustment number 7 here, written that depreciation is to be charged as follows. Okay, factory machine at 25% per annum using the diminishing balance method. Okay, so factory machine, that means it will come here. So what is value in the question? Factory machine. So let us write here $120,000. I'll show you how to calculate the depreciation. Okay, as it is written that balance reducing method or diminishing method, both methods are same. So subtract the provision for depreciation. Okay, it is already given in the question. Then you multiply by the rate. Rate is here written in the question, in the adjustment clearly, 25%. Okay, so it is here $22,500. Okay, this is the value of depreciation. So let us write here depreciation. Okay, $22,500. Okay, these are the items we have in the question. So now if we add these all items, it is $109,000. Okay, this is the value of our factory overheads. Okay, now we have to add this value with this prime cost. If we add, it is $425,900. Okay, so now we have here work in progress. Okay, so let us write here opening work in progress. Opening work in progress. It is $23,000 written in the question. Subtract or less closing work in progress. It is $18,100. Okay, if we subtract Your answer is $4,900. Okay, now if we add these two value, it is $430,800. Okay, so this is our cost of production. Okay, so this is how you need to calculate your cost of production. Okay, so if you remember this process I showed you today, so whatever question is given you will be able to answer. Okay, so this is all about our today's lesson. I hope you understood and you enjoyed this lesson. This is very important topic in accounting, so please pay attention and learn this one properly. And then I'll show you in my next video how to prepare income statement and then balance sheet. Okay, statement of financial position. And until then, you stay safe. Bye bye and take care.